Hello and welcome to the State of the Fleet Market, a weekly video series produced by Automotive Fleet Magazine. My name is Mike Antich, I'm the editor, and today I'd like to examine key trends that are occurring in the fleet industry as of the week of May 11th. On any given week, I'm in contact with several dozen fleet managers, fleet professionals, but since we've started the weekly State of the Industry reports, I've increased my communications to close to 100 fleet professionals. Primarily through email, primarily through LinkedIn messaging. But in these communications, I'm asking recipients, what are they seeing and hearing in their segments of the fleet market? In fact, I know many of you that are listening to this presentation have been recipients of these communications from me. So what is uppermost in the minds of most fleet professionals? Well, the number one recurring theme is the lack of clarity. The lack of clarity that they have in regards to what happens next. What's going to be happening after this pandemic subsides. I mean, most people believe that the recovery will be different, but it's difficult to predict how it's going to be different. We have no prior model. There's nothing for us to benchmark against. So everyone is in a wait and see mode. Now, companies are taking advantage of this time as an opportunity to reassess their fleet operations, and many are rethinking their use of shared vehicle pools, multi-use vehicles. Now, this used to be considered a best practice as recently as 3 months ago, but today it's being viewed as a potential liability risk. The other thing is, people have more open minds now. While nobody's making any big decisions in regards to their fleet, they want to see how things play out first. But the fleet suppliers that I talk to are telling me that they're sensing and experiencing a greater willingness on the part of potential customers to now explore new fleet solutions. So based on my communications with the industry, let's take a look at what some of the trending topics are that people are talking about. Well, the number one topic of conversation continues to revolve around new vehicle production. For most fleets, their existing factory orders continue to remain in limbo. Now, the good news is that General Motors, Ford, FCA, they've all announced that they're going to slowly start commencing production on new vehicles at most of their North American factories on May 18th. While the factories are opening in the US, there's a large reliance on parts imported from Mexico, which is currently in the midst of its own COVID-19 health crisis. And just like in the US, Mexico has divided its economy into essential businesses and non-essential businesses. The auto sector falls under this non-essential business segment. This is causing some fleet managers to express concern. Could there be potential production impacts? The answer is probably not, hopefully not, but it feeds into this uncertainty that fleet managers have. And it goes back to my earlier point. The number one recurring issue is uncertainty. Another key topic that is trending among fleet managers that I talk to is their internal cash flow concerns. Many companies are reducing the annual spend that they have. Most fleet managers I talk to are expressing concern about possible cuts to their fleet budget and the potential impact this may have on vehicle acquisition schedules. These cash flow concerns are extended into a number of different areas. As companies have these cash flow issues, many fleet customers are requesting deferred payment schedules. Some are canceling orders altogether. There are disputes over collecting restocking fees with their suppliers. Some customers expect suppliers to provide price concessions. Suppliers are pushing back, saying, the pandemic is severely impacting them as it is the customer. There are increased inquiries from fleet managers to their lease companies about, early term vehicle leases due to the layoffs that they've been experiencing at their companies. And rebates are extremely important to the fleet industry, and they're decreasing. We're experiencing lower fuel and national account maintenance rebates. Many fleets are experiencing these pressures, but it's government fleets that are being particularly hard hit. Many government fleets are forecasting a decrease in their capital budgets for 2021, and they say this is going to result in decreases in vehicle purchases. And the forecast within this segment is that it won't be until 2022 before government budgets return to the 2019 levels. Another trending topic is that more fleet managers are being forced to dispel wrong expectations by their own management. So what do we mean by that? One of the consequences of the sheltering at home mandates has been that fleet costs have declined. In particular, as vehicle mileages have dramatically been reduced, they're driving fewer miles, they're consuming less fuel. And this is amplified by the fact that you have a low cost of fuel. The average price per gallon of gasoline as of today was $1.84 a gallon. The average price for diesel as of today was $2.42 a gallon. Some companies I talk to tell me that they've experienced as much as a 20% decline in their total fleet spend due to decreased business activity caused by the pandemic. Now, these declines in fleet costs have caught the attention of other people within their organizations, in particular procurement, who now wants to establish this level of the current level of fleet spend as the new baseline. And these lower costs are an anomaly. This isn't the new reality. These are anomalies that were brought on by the shelter-in-place mandates, and it's going to be hard to replicate these savings when the economy reopens. And it's these misconceptions that are causing headaches for some fleet managers who are struggling to dispel these erroneous expectations by their management. I'm confident fleet managers are going to be successful in bringing people back to the reality of what it takes to operate a fleet, but nonetheless, it's a needless headache that many of them are dealing with today. Another trending topic is the emergence of new safety protocols. Today, sanitization is now an integral part of many corporate fleet safety programs. Disinfectant procedures are now part of driver protocols. Social distancing is now part of the safety equation. All of this is requiring new training procedures so employees understand these new workplace requirements. And of course, this is also generating, the need for new paperwork to document this training. An ongoing issue is remarketing concerns. All fleet managers are expressing concerns about vehicle residual values. The physical auctions continue to remain closed. Sales are primarily online. Last week, Cox Automotive announced that it will furlough 12,500 employees, and Cox Automotive is the parent company of Mannheim. Car, the parent company of Odessa, has furloughed 11,000 employees. Most rent-a-car companies have canceled new vehicle orders. A lot of people might not realize is the majority of fleet purchase volume is from rent-a-car companies, not commercial companies, but the rent-a-car companies. And with the potential for fleet order volume decreases, the question is, what impact will this have on the used vehicle market? Will a lower inventory of vehicles mean higher used vehicle prices? And what will be the resale market once this glut of vehicles is remarketed? Nobody knows, but again, it goes back to the earlier point. It all feeds into this widespread feeling of uncertainty. Another trending topic involves driver fears and how this is impacting fleet operations. Some drivers have taken personal protection to an extreme. The drivers are actually refusing to take their vehicles into shops for scheduled preventative maintenance out of fear of being infected by the virus. Drivers are also delaying telematics installations as they do not want anybody in or near their vehicle out of fear of contagion. Drivers and managers all want to ensure that all the precautionary measures are being taken to safeguard employees, but one of the consequences has been an uptick in drivers expensing money to have their vehicles disinfected or to have complete interior cleanings. There are a number of issues that are affecting the industry that are coming out of these communications, and I'd like to explore the next ones just in a bullet point fashion. One of the key areas that's now being examined by companies and what they're working on is the return to work protocols. As the economy is opening up and as fleets that were once idled are now gearing up towards the economy opening, they're now implementing these return to work protocols, which are turning out to be more complex, especially as you have differing schedules among states as to when they're going to be implementing their reopenings. Another area is working remotely. Yes, everybody is working remotely, but what's catching my attention is the number of people that say that they're going to continue beyond the summer working remotely and into later in the year. I mean, employers are witnessing firsthand that technology is enabling employees to successfully work remotely, and many employees prefer working remotely. I anticipate that this is going to have a longer impact in our industry as we move more into this year. The other area is, as we start transitioning to the 2021 model year, many OEMs provide vehicles as demos. And fleet managers are asking what's being done to assure that these vehicles are properly disinfected as they're moving from one party to another. Another key topic is, it's more of a gripe than anything else, and it's the fact that everything is taking longer to do. I mean, mailings to drivers are taking longer. Driver sales are taking longer. Getting a signature is taking longer. And the feeling is things are going to get worse working with the DMV as they try to dig out of their backlog. Upfitting is still moving, but there continues to be a large backlog of orders. And in reality, the upfitters can only move as fast as their supply chain. As we enter the next model year, what's going to be the new normal for 2021 model year order to delivery times? Will they be longer? The summary is everything seems to be longer as we're working through this pandemic. We're in unprecedented times, but in many ways they're normal times. There's still a lot of RFPs that are being issued. In talking with fleet managers who are preparing these RFPs or with fleet suppliers who are receiving them. And even though the number of employees being furloughed are at Depression era levels, many businesses are still hiring replacements to fill vacant positions, especially at essential businesses. And these companies are finding it difficult to buy out-of-stock vehicles for these new hires. And as I mentioned in last week's presentation, many companies are actually thriving in this pandemic environment, especially those involved in last mile delivery, logistics, transportation, the food supply chain, medical supply chain. For all of them, business is good. But there is one constant that's come out of my communications this week and prior conversations with fleet managers, and that is the uncertainty within the fleet market. And hopefully this will start to fade away as the national economy starts to reopen. So with that, that concludes my State of the Industry presentation for the week of May 11th. I want to thank you for listening, and in the meantime, stay safe and stay informed. Thank you very much.